The Trump administration issued some exemptions for particular products under their sweeping tariff policy, including electronics like computers and smartphones, etc.
In a bold and characteristic move, former U.S. President Donald Trump once again sent shockwaves through global markets with a hard-hitting message to China. The world's second-largest economy will not be escaping the bite of American tariffs, especially on electronics. This declaration comes at a time when trade relations between the U.S. and China remain fragile, and the broader geopolitical climate continues to evolve in unpredictable ways. Trump's statement, made on April 13, 2025, during a press conference at his campaign headquarters, reaffirmed his tough stance on trade with Beijing.
So this week says this: after Trump exempts tech like phones, computers, and chips from new tariffs, Howard Lutnick tells Jonathan Karl they will be included in semiconductor tariffs to be released in the coming months. Lutnick saying this is not a permanent sort of exemption. So that is different than what we heard Friday night and Saturday morning, a different line now.
While earlier reports suggested that the Biden administration had implemented temporary exemptions on certain electronic products, such as smartphones, laptops, and tablets, Trump dismissed these as superficial. He emphasized that China, in his words, was not getting off the hook, particularly when it comes to high-tech goods that form the backbone of global supply chains. This aggressive rhetoric was not just campaign bravado, it carried substantial economic implications. During his first term, Trump had already reshaped U.S.-China trade dynamics with sweeping tariffs under the Section 301 investigation. Now, with the global semiconductor race heating up and the U.S. increasingly aiming to reduce dependency on Chinese manufacturing, Trump's warning marks a new phase in the ongoing economic battle between the two superpowers. The warning is not only symbolic, it reflects growing sentiment among U.S. policymakers that China's dominance in the tech manufacturing space poses a strategic risk. Over 70% of global smartphone components and a significant share of consumer electronics are still manufactured or assembled in China. The U.S., under both Republican and Democratic administrations, has been pushing for reshoring critical industries, with particular focus on semiconductors, lithium-ion batteries, and AI hardware. Trump's comments further highlighted that while temporary relief may be granted for certain products due to consumer demand and global market sensitivity, these are short-term fixes. He argued that long-term national security and economic independence require a consistent and robust tariff policy that targets Chinese goods, especially electronics, which are seen as both economically significant and strategically sensitive. In response to Trump's warning, Chinese officials issued a measured but firm rebuttal. A spokesperson for China's Ministry of Commerce stated that Beijing would not be intimidated by unilateral pressure or protectionist threats, and reiterated China's readiness to implement countermeasures. Indeed, shortly after Trump's remarks, Beijing increased tariffs on select U.S. goods and tightened export restrictions on key minerals used in chip manufacturing, specifically gallium and germanium, essential for military-grade semiconductors and advanced electronics. These developments are taking place amid a larger context of decoupling between the U.S. and China. The COVID-19 pandemic exposed vulnerabilities in global supply chains, and the Russia-Ukraine war only reinforced the need for supply chain security. The U.S. has responded by incentivizing domestic chip production through initiatives like the CHIPS and Science Act and increasing investment in countries such as India, Vietnam, and Mexico for alternative manufacturing bases. Trump's statement also reignited the debate within the American business community. On one hand, many manufacturers and economic nationalists support the move, arguing it protects American jobs, promotes domestic production, and ensures that the U.S. remains competitive in critical industries. On the other hand, tech companies and consumer electronics firms expressed concern about the timing and execution of such tariff policies, noting that they may lead to higher costs for American consumers and disruptions in product availability. The stock market reaction was immediate. Shares of major electronics companies, particularly those heavily reliant on Chinese manufacturing, such as Apple, Dell, and Nvidia, saw slight dips following the announcement. Semiconductor industry leaders, however, remained cautiously optimistic, as they see tariffs as further justification for reshoring efforts already underway. Critics argue that Trump's approach oversimplifies the complexities of global trade and risks antagonizing an already tense relationship with China. They point to the mixed results of his 2018 to 2019 trade war, during which tariffs did not significantly reduce the trade deficit and led to retaliatory tariffs that hurt American farmers and exporters. Yet Trump remains steadfast in his belief that a strong hand is the only way to compel China to play fair in the global economic arena. Supporters of Trump, particularly in manufacturing-heavy states, welcome the move. Many view it as a return to the America First agenda, which seeks to prioritize domestic interests and level the playing field against foreign competition. Trump's narrative of economic sovereignty and technological independence resonates strongly with voters who feel that globalism has eroded American industry. Beyond the politics, the implications for the global electronics industry are far-reaching. If Trump's approach gains traction, we could see a wave of reconfigurations in supply chains, with companies looking to reduce reliance on China, not only for assembly, but also for critical raw materials. Countries like India and Vietnam stand to benefit from this shift, while China may be compelled to further pivot its economy inward and increase its investments in self-sufficiency, particularly in semiconductor technology. In the long run, this confrontation signals a structural shift in how the world thinks about trade, especially in high-tech sectors. No longer is globalization taken for granted. National security, supply chain resilience, and technological sovereignty are now central to trade policy. Trump's statement, though simple in its phrasing, encapsulates a deeper transformation in global economic thinking. Meanwhile, American consumers may face the most immediate impacts. Electronics are a daily necessity, and even minor shifts in pricing or availability can affect millions. With tariffs likely to raise the cost of production for many goods, it remains to be seen whether companies will absorb these costs or pass them on to end users. What's clear is that Trump's warning is more than just campaign rhetoric. It's a signal of the policy direction he envisions should he return to office. It also sets the tone for future U.S.-China relations, where cooperation may increasingly take a back seat to competition and strategic autonomy. As the U.S. election cycle heats up, trade with China is once again becoming a centerpiece issue. For Trump, it's a chance to double down on a message that helped him win in 2016. For China, it's a test of how far it can go in resisting external pressure while continuing its rise on the world stage. In this high-stakes game of economic brinkmanship, one thing is certain: electronics, once seen as simple consumer goods, have now become chess pieces in a much larger geopolitical contest. The US-China tariff war is no longer just about trade, it's about control over the future of global technology. Stay tuned as we continue tracking this story and its unfolding impact on trade, technology, and geopolitics. For more updates and expert breakdowns, don't forget to follow and subscribe.